noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Style is the bomb, daddy bomb.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over-under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say, Based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so small.
So crack open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Statmans.
All right. Good morning, everybody. Good morning, Mickey.
Good morning. How you doing?
I'm doing wonderful. How are you doing?
I'm doing amazing. All right, let's get it. Oh man, they say we trend more than we range on the higher time frame, but I don't know. Ugh.
Friend your friend, bro. Morning, everybody. Morning, good morning. Drop it in the chat if you haven't yet. If you are new here for the first time, we do this every single Monday and Friday, 8:20 a.m. EST. I always forget to mention this right at the beginning, but we are trying to get to 100 live viewers. And one really easy way to do that, and also be a win-win for you, is click the pinned tweet in the chat, like and retweet it. And if we hit 150 live viewers, one random person that likes and retweets that will get $80. Let's get this stream out to as many people as possible. Good morning, Maz King, Wild Bitten, Diddy's in the audience. Holy morning,
Heck
Equal.
yeah.
Morning, Jeff. Morning, Dale. Morning, Chitaki. We got Brooke, Risky Trade, Tom and Price, Drez, Shag, EP, Wild Deuces, Dark Helmet. Good morning, good morning, good morning. Escoba, Austin, we need an intro video that matched the narration. Well, that was kind of a funny thing that we just made on the fly, but yeah, we actually have some really cool stuff getting made for the official intro video. And speaking of that, before we get super into this stuff, we have Pack TV starting next Monday. So next Monday, not only do we do what we typically do, where we live trade in front of you guys, do our analysis and our trade ideas and all that, but we are going to have a bell-to-bell statistical live trade session for the entire day. So we're going to have actually, and I can show you guys right here, we are going to have Bowie, our London trader. You can see on the bottom there, this is going to be the schedule if you guys want to note it down, remember it, or anything like that. And that's going to be Bowie, our London live trader, 3 a.m. EST. We're going to be starting Pack TV Monday. So Sunday night going into Monday. And then we're going to have Magic Hour. So Carl, Drez, and Miguel, shout out to you guys. They're going to be leading the pre-New York live trade session, 6:30 a.m. EST Monday. Then we're going to be going into what you guys typically already see. Mick and I trade the New York Open. Then we're going into Ambiguous Hour for the late New York AM session with Cody and Jesse, 10:30 a.m. EST. Then we got Justin coming on doing a boot camp focus session where they're going to go each Monday that we do this. They're just going to take a snapshot of what that week they're working on in the boot camp and just use live price to actually use what's happening today to demonstrate the fundamentals and the things that we teach in the boot camp. Then on the top right there, you can see 4 p.m. EST. We're then going to re-engineer the entire day. So you guys are going to get from bell to bell what it's like to be in the community for an entire day. From London Open live trading, the only thing you don't see is the boot camp lectures that Mickey gives at 5:30. Other than that, that is an entire day of live trading, learning, education, and just having a good time doing it. I'm excited.
Yeah, all right. I think we're good now. I was playing whack-a-mole with all these new boot camp members, kicking them out of their little live rooms and forcing them over here. But I think they got the point.
Dope.
Yeah, I'm pretty excited about that live TV.
Yeah,
I
it's
just
gonna be
think
fun.
it's pretty cool that you just get to see real traders execute real risk. They're playing in front of you that and just get after it, right?
When it's literally different people that use the same numbers and the same tools, but they're like, you guys get to see how many, what, 1, 2, 3, 4, 5, 6, 7. You get to see 9 different perspectives of using and looking at the market the same way and objectifying it.
Yeah,
I mean,
and you got people that use volume profile,
yep.
order flow, ICT, supply and demand, and they put statistics in the same levels to make their decisions. And I think that's dope. Market structure. So yeah, man.
Dude, every time. Restream has 2 modes when you activate music. It's either snort a line or elevator. There's no in between. All right. All right, let's get into a little bit of what I see. So, going into the day, first thing I always like to do on these Monday streams is kind of go from the very beginning and explain the context of why I do everything and add everything to my chart. Because one thing that a lot of people do when they look at either Mick or my screen, they're like, dude, what does all these lines mean? You can't for sure use this stuff. All of this stuff has a meaning, but it does. So the first thing I do is I go to the 60-minute chart and I just want to see, okay, where are we at within the weekly candle? Is there anything that the weekly candle still is left to do in terms of just statistics? And the statistic that I care about within the weekly candle is statistically the first portion of the week is going to set the significant high or low. And then the other portion of the week, the later end of the week, it typically will set the opposite high or low. So if Monday to Tuesday sets the low and then we start taking the high, then statistically we're due for a new high Thursday to Friday, and then vice versa. So for instance, this week we have a low and we have a low on a Wednesday. We don't typically long-term historically have those lows on a Wednesday. Typically it's a Monday, Sunday to Monday to Tuesday, like the first 3 days. This week we just we did it. All right. We don't typically do it though. But then when we came back up and took the high, now we're saying, okay, we're above the weekly open. We have a high on a Thursday. That's the second highest probable high of week. But then is there anything going into today that could lead me to see or paint a picture of this weekly high being taken to some degree? And so then that's what I do within the daily candle. So I know that this is the second highest probable high of week. So it's not as if this is super, super significant to me. It's not like we have to make a new high a week from a statistical standpoint, but it is the second highest with Friday being the first. So then I come down here to the 5-minute and I see, am I above or below statistics? So when I say statistics, all I mean is levels on the chart that repeat every single day that are backed by a number, that are backed by some objective number that is giving me a higher odd than just a coin flip. Because if I were to ask every single one of you that's listening to this and watching this, if you just have 2 doors and behind door A, you have a 50-50 shot of being a millionaire, and behind door B, you have a 50.1% chance, everybody would choose B. Not one person, unless they just don't want to win the money, not one person would choose door A because there is a better odd, even if it's a microscopic additional percentage. People find peace in objective numbers that they can see. You know, if I were to tell you 2 + 2 = 4, and then I can prove it, I can add 2 apples on the left, 2 apples on the right, and that equals 4. I can demonstrate it. You're going to now trust that math and trust that objective, thing even more because you can see it. So when we come to the markets and when people say, well, this high is a high probability high, or we have a high probability of going higher, or anything like that, and they use the term probability, but they can't have a number to it, then it's not a probability. It's just their discretion. And that's not a bad thing either. It's not bad to rely on experience and discretion. It's just that's not how I like to trade. How I like to trade is if I want to target a specific area for price to come to, I want to have a number to dictate that when live price is agreeing with this direction, I can then take that position. And so, for instance, today, instead of just saying, well, this high could arbitrarily get taken, well, is there anything that has a statistical relevance to getting retraced or hit or crossed or tapped into, whatever? Is there anything to this high of day that we currently have at 120 that has probabilities attached to them? Yes, we do. We have opening prices 1, 3, midnight open, and 2 a.m. So basically, this chunk of opening prices right here is telling us, okay, these are areas, these are opening prices with objective numbers attached to them that if live price starts to look bullish, and this high of day is an out of stat high of day, which it is, then even if I'm wrong about price potentially coming and making a new high of day, at a minimum, I have all of these reasons to have checkpoints of price. So then when I'm structuring a trade idea, if I'm, let's say, in a long off of 930 or anything that gives me a long where I'm finally in a position, I get to see, okay, well, now I'm not just going to shoot for 700 points. My exits, my TPs is going to look like this. It's going to say, okay, well, if I'm in a position here and I have all of these objective reasons, they're not just feelings, they're not emotions. These are objective reasons that price can hit here, can hit here, can hit here, can come and retrace all these levels, can take this new out of stat high of day. If it has all these reasons to do this, now what I get to do is scale out of this position with my overall idea of, let's say, a new high of day. But what I get to do is I get to be right even when I'm wrong. I get to look at this market and say, these are the highest strike point areas. These are the highest areas that price could come to, even if I'm wrong about targeting this high, and I can still get paid along the way. Because what a lot of people do is they'll just, let's say I'll target this high, and then they'll watch price come halfway to their TP, and then, it stops them out. They were right about a good portion of the move. And I'm sure everybody in here listening can also attest to this. There's a lot of trade ideas where you're right about a good portion of the move, but you just can't get that final little follow through, because the longer that you're in a trade, the more you're just exposed to just the market, right? Not just your edge, but just the market in general, doing whatever it wants to do. You got news events, you got just randomness. Like, you got different things that the longer you're exposed in a trade can still make your trade, as beautiful as it looks, lose. So this is where I like to use all of these high probable statistics. And when I say statistics above or below price, this is exactly what I mean, because this lets me know checkpoints in price where, okay, even if I am wrong about the high of day getting taken, we can maybe take 2 out of 4 of these opening prices and do something like this. Okay, so I just get to see where that high probable mean reversion is. So with that context, I can say, okay, we have 1, 2, 3 bullish levels above price. We have opening prices above with an out of stat high. And then we have New York 1 still within range. So now I can sit here and I'll let Mickey go way more in depth in the daily profiler portion. But the only piece that I go over here with the New York. Oh wait, did we go short, Mickey? Am I crazy?
We did, but it's a 1 tick number.
Oh,
yeah.
That dirty little dog. Okay. Well, now I'm glad we're doing this live, because this is my initial reaction anytime we see these small little 1 tick wonders, guys, is I'm now looking into the daily profiler and I'm seeing, Is there any reason for this 120 high of day to be a long true? Or I'm sorry, the low of day. I'm sorry, 445. So is there any reason for this low of day to fit a potential long true? So then I go into the daily profiler. Currently, we are long true broken. We are short true none for London. And then London OU is up here in midnight open. So for those of you that are in the pack and have graduated the boot camp, you know what I'm about to do. I'm counting London as being broken, even though it's not, to account for the high day, low day projections. And then I just want to see for a long true, do we have a low of day? Okay, we do not. Do we have any low of day or high of days overnight that relate to? No, we don't. Okay, cool. That's dope. It makes it a little bit easier. So now going into my bottom line up front of what I see for just trade ideas, and I'll pass it over to Mickey here, is going into the day, we have an out of stat high of day. We have an out of statistic low of day. And we are what I like to call in between statistics. Okay, so we have reasons to go higher in terms of just checkpoints of price, but then we also have reasons to go lower, which is we have 1, 2, 3, 4, 5, 6 bearish levels. We have an out of stat low of day, and we have the P12 low with how we've rejected this P12 mid, where we've came up, tried getting above it, failed, tried getting above it, failed. This rejection right here from the P12 mid, that is what I like to see when I'm trying to see, okay, are we going to attack the P12 low first or the P12 high? Because we're failing to get above the P12 mid, this leads me to believe if this P12 mid is failing, is keeping price to the downside, then the most likely scenario is taking the P12 low. So then if we come down here to take the P12 low, then we will be for sure short for New York 1. Okay, and if we are for sure short for New York 1, this is the classic trade that I love to see, which is going into 9:30 with a lot of statistics above price with a good in-stat low of day. And if we break above it, these are my bread and butter extended cash flow, shorts back to the P12 mid to midnight open from a low of day standpoint. But, big but, if we do a short true, because I'm looking at the short true statistics right now, and if we leave London not broken for a short true, we do have a high of day at 215 with a little bit of clustering of time around this 120. So I will be just paying attention if we get below 930. So if we open up 930 anywhere at or near the P12 low here, and we break below it, if we stay below 930 by 9:45 to 10 o'clock, that will put me in all signs of maybe we are true, especially with how we've interacted with the P12 mid, where we haven't even tried getting above it. It's just holding it down really nicely. So basically, from a higher time frame structure, it would just look like a, lower lows, lower highs. And so then if we get below 930, 9:45 to 10, that is making a check mark for the true. And then if the true, then we have low of day distribution and time by noon, 12:15 to 12:30. If we do the false, which is the higher scenario, we'll make low of day around 9:30, 9:45, and then make some nice statistical mean reversion. So here's my trade ideas going into the day. Trade ideas going into the day, stupid, simple. If we take the low first, so if we come down here and actually take this low at 572.50, and we do open up the market somewhere here, if we break above 930 and I can define my risk, I will take an extended cash flow long to the upside for the false movement back to P12 mid. But 930 has to make low of day. If 930 doesn't, we have this weird 945 still looming. I'll be a lot more careful. But if 930 makes a good in-stat low of day and we get above it, this is my bread and butter trade. If we break below 930, I'll be heavily cash flowing out of this trade, but I will try to leave 1 or 2 micros open for a runner for a new low of day around noon. If we do the other side, if for any reason we stop in our tracks and we start coming to the upside, I'll be very hands off, because on Fridays, especially when I have a really good week like this week, I really only take the trade setups on off of 930 that just 100% fit what makes sense to me, and if it doesn't, I just leave it. So if we come back to the upside here with this one tick wonder, we like to call it, and we open up the market somewhere, you know, at near London OU, if we break to the downside, I'm not touching it, because that one tick wonder could be a crazy scenario that I just really, it's hard to account for with 930. If we break to the upside with these statistics still above 930 and I can define my risk, I will cash flow a trade. I will just look for a just straight cash flow trade. And that's really it. Bottom line up front, 930 opens above where we're currently at. It's just cash flow longs, nothing short. If we open it up 930 at or near low of day, breaking above its extended longs or extended shorts. And here you go, Mickey. Do we have Mickey in the building?
Yep, you do. Let me share screen. Entire screen.
Yeah, guys, if you get value from the stream, we got 77 people in here.
Let me know if you can see my screen.
You sure?
Can you guys see?
Can you hear me?
Can you guys see?
Hold on. I had to turn that off. Can you hear me now, Mickey?
Yeah, we can hear you.
You were sharing audio. Reshare your screen, but make sure you don't have audio sharing.
Oh, yeah? Uh-oh. All right, stop sharing screen.
It was like looping me.
Uh-oh. There we go. Try now. What about now?
Test. Okay, we're good.
All right. Cool. All right, let's get it. All right, so starting on the daily chart, we're below NFP Friday. We're above previous month 50%. So we know that there's no edge in daily colors. We expect 50% green, 50% red, but we do expect volatility to pick up, right? That's what statistics show us. And so now moving on to candle science, which is a cool little way that we put probabilities on, you know, open, high, low, close, right? Open, high, low, close. So what we are going to do is we are going to use Wednesday and Thursday to figure out the probabilities of the day and it reaching the high or the previous day low, and then where from a percentile standpoint we like to go, right? So coming over to here, we know that closed above the high yesterday, and then the day before that was bullish, and yesterday was bullish, and we closed above the high, right? So we know that we have a 77% probability to take out previous day high and a 27 to take out previous day low, right? But now, if we factor in the fact that where would the turning point of my decision making be? So we can see 77 to take out the high, 27 to take out the low. Well, if we touch and violate previous day opening price, does that affect the statistics, right? And we can see that it does. We drop a couple percent off the previous day high, but we increase a lot to the previous day low, right? So we know that if we touch this green opening price from yesterday, that our probabilities of taking out previous day low go from 27% to 62. We have not done that yet, right? So we consider this previous day high the higher probability, right? So now we're going to figure out where the higher probability, high percentile reversal zone is after we take out this previous day high or low, right? So I went on and did, you guys, the benefit of, you know, putting the MFV data on here, right? So we know that out of 3,778 days, based off of what Wednesday and Thursday has done, that's happened 1,153 days. And out of that 1,153 days, that the high probable 30th percentile zone, meaning out of that 1,153, 30% of the time reversed before this yellow line's previous day high, it reverses before 0.25 of a previous day high. 50% of them reverse before 0.3 off a previous day high. And the 70th percentile zone, which means there's only 30% that goes above, but 70% of them reverse before 0.70. So if you look on my screen, you'll see this green box. The bottom of that is the 30th percentile zone. The mid where the green and the red enter is the 50th percentile reversal zone, and the 70th is where the red meets the graded upside. Right? So we know that the if-then statement is if like we sell and we breach this open, we're more likely to go to this percentile reversal zone off of previous day low than to go to this one. But as of right now, we haven't hit the if-then statement, so we have to still understand that this is the higher probability. Moving on to the weekly chart, right? And a cool thing that we get to see and that we're teaching in the boot camp right now from the hourly approach is that Q2 for the week made an instat high, and then we broke it in Q3. So we're expecting a doji weekly candle, and from a weekly standpoint, we're above Sunday and Tuesday, right? So we're locking this in as a low of the week, and we have higher probability targets at 25,810 to 25,932. I say again, 25,810 and 25,938, right? So right here, right? And now we know that this 50% level, 50th basis point level, is worth 86 percentile, 86% probability of getting a hit. It's hit 45 out of the last 52 weeks, and this one right here has hit 78%, 78. It has a probability of 78. It's hit 41 out of the last 52. And the interesting thing that I see here is this is exactly, these probabilities are exactly where this reversal for the zone is. So now we're starting to see some weekly, you know, stacking of probabilities around this area, right? All right, so we know that now we are short, right? For New York 1, right? So now when we've looked at probabilities from an open, high, low, close, now we're going to look at it from a based off of what Tokyo and based off of what Frankfurt markets are doing, right? What are the probabilities of what New York 1 is going to do? So we're going to come over to the daily profile. We're going to reset. We're going to start with 4,500 days, right? We saw that Asia ripped, they bought it, and London, they sold it, right? So we're going to put those scenarios in daily profile. Long true broken, short true open, right? Right out of the gate, we see that London OU has a 79% probability of getting hit, and the mode and the median is between 930 and 10, right? And we know that we went short out of New York 1, right? And we can see that there's a 65% probability to go false and a 34 to go true, meaning, right, the 730 to 830, a false means by 1130, we'll breach this high after breaking into the downside. A true means we cannot take this high out and we continue selling off, right? So now we know the criteria that is more likely to go down and then to come up, right? So we have an awesome level right here called the P12 low that we can base, we can start pulling stats. Do we want to reach that far low, right? If we do that scenario. So we're going to go short false just to see what the high day, low day looks like. And we can see that there's more likely a probability that we do make a new low of the day. So that low of the day that happened at 4, right, does have data, but doesn't have as much data as 930 to 1015. From a percentile from a price standpoint off Globex Open, that's 0.25. Right, and we can see that that 0.25 sits right here where the mode is. So that 425, we can look below it and then come up, make a new low day, or from a time standpoint, we just go with the lower probability and turn around right now. We know for a short true, right, the high day probabilities, which our current high day is at 1 o'clock and 0.49 off of that, right? We can see we have some data to support that high of the day, and we'll definitely hit it. So now it comes to a live price action. We're not going to be able to just read historical data. We're going to have to literally like build if-then statements, right? We know that from an upside approach, right, there is reason to come touch this London OU, which is above us. And there are plenty of probabilities to come touch P12 high, to come touch Globex open, which maybe we did that already. Yeah, we're sitting on Globex open. So settlement and midnight are above us. So we can see midnight has a 76% probability with the primary time of it getting hit between 9:30 and 10. And then we know that on a Friday, based off of what Asia and London did, right, there's high probabilities for gap fill, settlement fill, right? So we know there's plenty of willingness to go up and there's plenty of levels to target the upside. All right, so real quick, the last thing I'm going to do is I'm going to put my high day, low day for a short false in my indicator. We can see for a high day it should be 0.5 to 0.7 off the Globex open, which I believe we almost hit. 0.5 to 0.7, right? And then the high day is going to happen in power hour, but specifically after 15:30 to 16:15. Here we go, 15:30 to 16:15. And that's when we're expecting high day, right? So right around there, taking out previous day high, coming up higher, and this is where we expect to be during that time. Right, now we're going to go look at lower day, right, for a short false. Right, obviously we already said 9:30 to 10:15 is the highest probability. The mode to median is from 0.2 to 0.7. And this is where we're just going to use some common sense. 0.7, and we know from 9:30 to 10:15 for the low of the day, right? So let it update. All right, so we know that this is the low of the day. Now we're going to do one thing, right? Because we know from candle science, it said pay attention to that previous day open. So let me draw a vertical line on that previous day open. This is right there. Let me jump back. So we know that if we come down below and we just take a previous day low and then suck back into the range, and we're about to talk about the live price component of it, right? More than likely the false will come in. But if we fall below him, we don't instantly suck back into the range, more likely we're going to do a long true or a short true for the rest of the day, meaning we will not breach the 7:30 to 8:30 box. And all these high probabilities above us, they shred off the face of the earth and we don't care about them anymore and they're dead to us, and you know, they get kicked out of the family will, right? And then we were going to game plan for a short true. Only thing I need to know about a short true is that I'm expecting the low of the day for a short true to happen between 10:15, the 10 o'clock hour, or the end of the day, right? And I'm expecting for it to go anywhere between 0.4 to 1.4 to the downside. And that's why we read live price and we're syncing in with New York 2 to kind of zone in on that low of the day for the afternoon session. Right, so I'm cool with that. So let's talk about the if-then decisions, right? High probability, increased cash flow to the upside, cash flow to the downside, meaning I'll shoot for extended targets up. I'll shoot for cash flow as we come down, right? Now, how do we make the decision, right? Like if we're going short true or short false, well, this is going to represent the 9 o'clock candle. This is going to represent the 9 o'clock 50%. And this is going to represent the 9:30 candle, right? And we're just going to execute a 4-step reversal concept here, right? So during 9:30 to 9:45, right, or 9:30 to 10 o'clock, we're going to say, hey, can we get above 9:30, right? Because we know the higher probability is to go up, right? Make a new low day and then go up, right? Can we get above 9 o'clock, 9:30 on the 1 minute high to low? Step 2, can we get above 9 o'clock's 50%? Step 3, can 10 o'clock get above 9 o'clock's high? And step 4, can we make an in-stat low? Now, that doesn't mean we wait to place those trades until those 4 steps. But once we execute those 4 steps, we're locking in the low of the day and we're buying the dips for the rest of the day, expecting that end of day, high of day, right? So that will be my game plan. the target, the number one, pay attention to how we respond right here, right? And is this just going to come into previous day footprint or wick, previous day wick, and then reject and go up? Or are we going to blow through it and we're going to expect a short true over short false, right? All right, so that's what I'm seeing. I'll use the 4-step reversal to kind of gauge. I'll start position sizing around that. If the 930 gives me buys, I'm going to take them with full contracts. I'm in my proper risk. And then like I'll hold on to runners into the 10 o'clock. I'll look to add to that position if those 4 steps are being done during Q1 of 10 o'clock for the 4-step reversal. If not, I'll just shoot for cash flow for the 930 to the downside. I'll use the 05 boxes as we keep going down to shoot for cash flow. And I'll be aware of, I'm expecting the low of the day to be at the 10 o'clock hour or the end of the day, right? Which is why I'll do that. But that's what I got. Yeah. Definitely expecting higher prices from all elements. And like I said, the target zone that I'm looking at is 807, 810 to, 845, right? For the high of the day.
New high a week.
Yep, new high a week.
Yeah, that make the most sense. Like that's why I tell you guys when I'm starting on the hourly time frame and just seeing where we're at within that week, especially on Thursday to Friday. I'm telling you, it's like the weekly highs and lows are a little bit of a cheat code because obviously Thursdays are great. Like Thursdays are still the second highest high of week, but when how this daily candle is being printed also aligns with the checkpoint of a weekly candle, it just makes a pretty potentially a good trade idea.
Dang, we didn't get to 180, did we?
180
or 150? What's the target goal for people watching?
150. We topped out at 93, bro. It's like we're at the cusp. I'm telling you guys, one day we're gonna get it.
Well, like at the end of the day, you guys get a choice. You can make your decisions off of probabilities, or you can make it off of fairy lines. Last thing I'll talk about, right? And this is for people that have been through the boot camp, are part of the pack, or just like love what we do, right? We've updated our daily profile indicator, so we can start seeing variance in like actual effects. So we know that in the last quarter, for example, midnight has been on average, right? Like, and I want to talk this because I think it's important, right? So we're going to go see without any Asia, just looking at, reset the filters. Let's go. Hello world. Let me refresh. All right, let me refresh again. Let me close out. And let's start the daily profile this way. All right, so we're going to talk about that midnight price, and we can do this with any level now. Right, starting with 4,584 days, right? Looking at midnight, we know that midnight has a 68% probability of retracement between 8 and 12. 8 and 12, right? We see that the mode of it getting hit is between 9:30 and 9:45, but you've got a bunch of data here that is from 8 to 8:45, right? So those are the two key times that midnight usually gets retraced, 65%, 68% of the time. Well, now we have the ability to track local markets, right? So now we can see that this quarter alone, midnight has been, well, let me do this. And we're going to do it just like that. So 08 to 12, right? We can enter whatever time we want. I usually do 6 to 1600 because I'm an all-day trader. We'll let it update, and we can see that from 8 o'clock to 12 in the local market, meaning the last quarter, we've hit this midnight between 8 and 12, 75%, right? And the max streak, we did it 11 days in a row. And we're currently on a 3-day hit streak, and the max miss streak was 3 days in a row. So now we can hover over any level that we choose, and we can start getting local volatility, local variance within the quarter, within the year. We can look at it over the last year. Let's see how it's doing over the last year. Right, that midnight has been hit 73% of the time, right? 73% of the time over the last year. Current streak's a 3 hit. Max hit streak is 13. And there's a bug in this because anytime we have a holiday weekend, right, Monday and Tuesday were mixed, and that's why it's showing up as like not hitting one, which we're working on fixing that. And over the last 500 days, it's been hit 74% of the time. So we know that between 8 and 12, this is a high probable target to use, especially when we get that short false or the long false coming back into the overnight range. Right. And I think this is one of the coolest tools that I've used in a while. And so, yeah, I'm excited for that. Right. Yeah. And that's what I got, brother.
Yeah, I think one of the coolest things in statistics I could ever give any of you as we end this stream here is the mean reversion of statistics themselves. That's what Mickey's talking about, is just like seeing that, okay, if something has a hit rate of, and go and test this, go and chat GBT and just literally say XYZ has a strike rate of 65%. Map out the mean reversion of this failing and going on win streaks, and then failing, going on win streaks. You could map out the typical losing and winning streaks, see the patterns of those winning and losing streaks, see how often does a level fail 2 to 3 times in a row. I'll switch to my screen real quick. This is another reason we get really fascinated by this. So if let's take Midnight Open here. So I tell you guys this all the time. Midnight Open, we retrace to Midnight Open 65 to 68% historically between the hours of 8 to noon, more than we don't. And so if we see Midnight Open or any probability, I'm just using Midnight Open because it's relatable to a lot of people. Anything that has a constant, it could be an opening price, a midpoint, a high, a low, anything that will always be repeatable, go back and look for yourself. And so when we see Midnight Open failing 2 to 3 days in a row, we're like, bro, we start to see, is there anything within our analysis that could get us to midnight today? Does it make sense? And if it does, if live price is agreeing, that's why we never just marry a statistic. We wait until this little bid and ask line is agreeing in the direction towards that stat. aka we love to use 930, Q1 to Q4 of the hourly candles, that type of thing. And when both is in agreement, we get to see, okay, maybe today is the day we mean revert. Same thing for P12 mid or even opening prices. So when we have these aggressive move days where we do not come back and retrace like we did yesterday, this is another reason I love to use these opening prices 1 through 7 a.m. So if I know that, let's say, if I zoom in here, you guys can see this, the 1 a.m. opening price in the past 77 days has been retraced 75% of the time. Go ask ChatGPT, what is the probability of a 75% occurrence failing 2 times in a row, 3 times in a row, 4 times in a row? Again, can it do it? Absolutely. But is it something that is likely to happen more than 2 to 3 to 4 times in a row? Not really. We'll typically see something like a 70 to 80% strike rate failing maybe 2 to 3 times in a row max before we can see that mean reversion. And so anytime I see these opening prices failing, like 2 days back to back, or even just yesterday, like the 1 a.m. failed to get retraced and it's hovering today, I'm not sitting here marrying, okay, we have to get to the 1 a.m. What I'm doing is now I'm taking this context of just the potentiality of a statistic mean reverting or now having even more pressure. And I'm seeing, okay, is how we're interacting and creating this daily candle in agreement that today we could typically see that. So for instance, today, if you guys go back and watch this war game, the beginning, I told you all we were in the middle of statistics. We were bouncing around here. Now look at the story. We took a little bit more to the downside here. It would look the best if we had a really good low of day. And so if we take and make a new in-stat low of day around 9:30, we're taking these bearish levels. We're making now an in-stat low or a wick of the daily candle. And now look, we have everything above price. Going back to that analogy I told you guys, If you had the opportunity, I don't care if you are so anti-stats or pro stats, okay? If you had a choice between becoming a millionaire, getting $1 million cash between 50-50 or a 50.1, everybody would choose 50.1. Look at this. When the statistics get taken below and then everything is left to the upside, this is what you're able to visualize. You are able to visualize we have around a 70 to 80% chance of at some point price revisiting this area of levels. We have a 60 to 72% range of probabilities right here, right? We have P12 high up here. And so all price has to do is now align with these checkpoints. And then these are now my scale outs. So then when price is in acceptance above 930, for instance, I can cash flow at the high strike rate move. De-risk, Mickey likes to call it protecting the queen. I can protect my queen. And then now look, a lot of people, when they're trying to hold for a runner, scale out of a trade, what's the one thing they're always like, well, where do I do it at? Do I do it 7 bajillion points away, or do I do it another 20 points, right? Am I doing it too soon or too late? That's the two biggest questions people will try to ask themselves when they're scaling in and out of trades. Well, look, these are objective facts. Objectively, if live price is in agreement to the upside, well, here's a whole range of probable price movement here. And so then I can place a scale out here at, at this level. And then I can place another one in the middle of all these levels. I can place another one here. I can then, if we're on a ripper, I could do my home run runner here, right? Like this is just giving me context of where to place when I am to maximize my winning positions. And that's all these statistics do. And then knowing the mean reversion or the variance is even more powerful when you're like, okay, we're stacked in this direction, but we failed midnight open 3 times in a row. Or we're stacked in this direction, but we failed P12 mid yesterday. Like that type of stuff. I just love it.
And so with that being said, before we get in the bottom line up front, we started the new boot camp, and this is the end of week 1. So roll call, if you're in the boot camp listening right now, like drop that shit from the boot camp, and what do you think of it? Is it good? Did it meet expectations? We still got a long route to go, but how was week 1 for you guys? And then we can get into the bottom line up front. Oh, we're going through some dope ass.
Insert in. I'm doing a little slideshow for the awkward 10-second latency that YouTube has.
I like it.
This awkward pause is brought to you by
the Daily Profile Pack Trade Group.
The Daily Profiler Pack Trade Group with live traders such as Bowie, Miguel, Drez, Carl, Nick, Austin, Jesse, and Cody. But wait, there's more. It is very risky. Do not do anything we do. It is hard to do. You can lose
all your money. All of it. It's gone. And it's gone.
All right, we're getting some comments rolling in here. What are y'all saying? Maverick says better than expected. Dojo Cat says first week was excellent. Well,
thank you, Dojo. I'm glad you enjoyed the first week.
He's new. He's new around here.
Yeah, obviously. I wonder if that his battle buddy Drez is there too.
Randy, I don't know what Shag means by I keep smashing, but I hope like smashing as in
what?
Smashing the assignments. I don't know what that means.
I think it means that 100%. No. All right, so let's do bottom line up front because I don't want to know what Shag is smashing.
All right, here you go, bro.
All right, so bottom line up front, right? Let me turn off New York levels. But actually, I'll point it out, right? Like I'll leave them on. Right, but this is the line in the sand. This is the previous day opening price. This will determine if I expect a true versus a false. Right, if we just blow through here, then I know we're not just rejecting out of the previous day wick. We're actually going through, and all the stats are shifting down to this previous day low. Right, I'll start shooting for cash flowing targets to the downside, but that's not the higher probability. The higher probability is to do something like this between now and 11:30, come down to go up. I broke it, and it's broke, right? Where is my target? Right above previous day high. We already talked about this level right here, between 810 and 937. Somewhere get all the way up there, and yeah, that's it. So high probability targets to the upside. 930 gives me buys out the gate. I'll cover the queen and all that, but I will shoot for extended targets up there with London OU, midnight open, and I'll just add to and take away around these levels around 9:30 to like 10:15 time frame. And then in the afternoon, I'm more than likely to be done trading if that's the scenario that plays out, and then that'll be my day. But if we start selling out the gate, I'll take the 9:30 sell breakout only, right? So if 9:30 does a breakout sell, like I'll sell it, minimum regular position size and cash flow targets, and then I'll wait for 10 o'clock 05 and I'll try another sell for cash flowing targets, and only that. But that's the lower probability that I'm looking for. I'm looking to go down if we haven't already made it to come back up, and that's me.
Yeah, and I'm honestly, guys, like I'd say 90% the same as Mick. Mick, real quick, I didn't actually run these this morning. What's the short true high day projections? What's the start and stop time?
All right, so short true.
I completely just did not run this
it's
today.
all good. 315 to 330, and we definitely met it from a price standpoint. So we went 0.49 in the mode to median for a short true is between 0.3 and 0.5. So we hit that from a price, and we're like 30 minutes off from a time standpoint, which is why I'm still focused on it. But from a variance standpoint, let me go get those numbers real quick. We did not talk about the true versus false variance.
I think we're on a 1 day true streak. I think we went true.
Yeah. One day true streak. You're absolutely right. With a max of 5 day true streak. So there's no edge in the variance right now.
Okay. So that is very useful because that's going to play into. Okay, cool. Thank you. Because basically going into today, we did true yesterday. So going into today for me, it's really a cut and dry trade. No matter, now that we're fully confirmed short for New York 1, we have 10 minutes till market open. So around market open, no matter where we open here, number one, as long as I can define my risk, if 9:30 opens and it's a crazy range, darn, just no trade day really. And I say that because it's, again, just a Friday. It's not like today's anything special. It's just, I always treat Fridays like, dude, give me what I want or I'm not doing it. So if no matter where we open up for New York 1, if we break to the downside, I'm cash flow heavy. I'm going to be looking for very, very aggressive 10 basis point moves, and I only want a couple micros if we do the minority potentiality, which is a short true movement to the downside. The higher probability is, yes, this mean reversion. I honestly, though, ideally, I would love to see us make a 9:30 low of day and leave these stats and then get above 9:30. I hate when we have this weird low of day here that's looming right below 9:30. And then we break above it, and then we do this little break above, false breakout, take the low, then go higher. And so I'm just being hyper aware of this movement. If we do leave this open and break above, I'll be very, very cash flow heavy on that trade too, because basically just want to protect my queen very early if I don't get exactly what I see, but I still want to be a part of this potential false movement. So that is what I'm seeing, guys. Appreciate all the kind words in the boot camp about the boot camp there in the chat. Once again, we did not get to 150 viewers, but we'll get there one day. But going on Monday, PAC TV, we will start live on London, 3 a.m. EST with our London live trader Bowie. Then we'll move into all the other typical live trade sessions we do throughout the day, and it's going to be a full-on bell-to-bell stream on YouTube. So, Mickey, you got anything else before we wrap it up?
Nope. We are
all
good
right,
to
guys.
go.
Pack Trade Group members, boot camp members, if you are currently listening, this is now Friday. We go into community live trade session. You should see in the Pack Trade Group Discord under the backtest voice chat. that is where we will be having the community live trade session. So for Shag, if you're still in here, he likes to also take lead on Fridays, but any boot camp members, you guys are not trading right now. Okay. You are trying to be as good and as quick and efficient as possible at identifying the classification of the day, how we're interacting with hourly quarters and 05 boxes. Pack trade group members, call your trades live. Use this opportunity to be in an environment of being wrong and just being confident in what you're seeing. And let's get after it. Let's have a great Friday. Don't give yourself poopy diapers. Stay grinding on your goals, and never, ever, ever let anyone tell you that you can't do something they never done themselves. And I'll see y'all later. Bye, everybody.
Later, haters.
They not like us, and they know that. They not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women, you're losing. Do this shit for